All right, today we're going to tear into a really powerful system for analyzing U.S. stocks using nothing but the hard numbers. We're going to see how you can get past all the noise, all the documents, and get straight to what the data is telling you. Let's dive in.
You know, if you're a serious investor, you know the drill. Due diligence is an absolute nightmare. It's this mountain of documents. 10Ks, earnings calls, investor presentations. It can take days, even weeks to sift through it all. But what if you could just skip all that and get right to the truth hidden in the numbers?
Well, that's exactly the problem the Finmagine AI Advisor's forensic analysis template was built to solve. It's really the flagship template for U.S. stocks, and it's designed from the ground up to be a purely data-driven investigation. It doesn't read the documents because, frankly, it doesn't have to. The numbers always tell the real story.
Now, this isn't just some messy data dump. It's a highly structured 7-part framework that systematically interrogates a company's financials from every possible angle. It's basically like having a forensic accountant built right into your browser.
So let's do a quick flyby of the system. It kicks off with a deep dive into the core financials, then it moves on to financial health scores, things like the Z-score and F-score. Then it asks a crucial question: is the company actually creating value? After that, it peeks at who owns the stock, dissects what Wall Street analysts are really thinking, not just saying, then it triangulates the valuation, and finally, it pulls everything together into one single actionable verdict.
Okay, so that's the what. But honestly, the why is where things get really interesting. The true power here isn't just the framework itself, it's the hidden stories that this thing uncovers. And to see it in action, we're going to run a full forensic analysis on a company we all know, Amazon.
And right out of the gate, the analysis flags something weird. A real paradox. On one hand, the business looks incredibly strong, it's creating value, but on the other hand, one of its key valuation metrics looks so crazy high it would make most investors just turn and run. So what on earth is going on?
So check this out. It's a tale of two metrics. On the left, we've got Amazon's return on invested capital, or ROIC, clocking in at 14.23%. Now that's comfortably above its weighted average cost of capital, the WACC, which is about 11%. That positive spread means for every dollar Amazon invests in itself, it's generating real economic value. That's the good stuff, right? That's what you want to see.
But then, you glance over to the right, and whoa, the price-to-free cash flow ratio is a mind-boggling 320 times. That just looks terrifyingly expensive. So what gives? Well, the forensic analysis digs in and finds the culprit. Amazon is deep in a massive $131.8 billion capital expenditure cycle, pouring money into AI and cloud infrastructure, and that spending is temporarily crushing its free cash flow.
And this is the absolute key takeaway here. The tool helps you see the difference between a strategic investment for the future and a genuine breakdown in the business. That context is everything. Without it, that 320x PFCF ratio is not just scary, it's completely misleading.
Okay, so that's puzzle piece number one. Now let's look at the next forensic finding. And this is where the tool has, I think, a genuine superpower: its ability to decode what's really happening inside the Wall Street consensus. Most tools you'll use, they just give you that headline buy or sell rating, and that's it. This thing goes way deeper. It pulls data from a special forecast page, which gives us the entire range of analyst price targets, and maybe even more importantly, how those recommendations have been trending over time.
And for Amazon, this is just a perfect example of what you can uncover. You see this subtle but really important shift. Over the last 3 months, the number of strong buy ratings actually fell a bit, from 21 down to 19, while the hold ratings ticked up from 1 to 2. Look, it's not a 5-alarm fire, but it's a clear signal of some quiet, creeping caution among the experts.
But then, you see this number, 85%. Just let that sink in for a second.
So what does that 85% even mean? That's the spread between the highest price target from an analyst and the lowest one. A spread that wide? That's a massive signal. It tells you that the so-called experts on Wall Street have a fundamental disagreement about what Amazon is actually worth. That kind of uncertainty is a critical piece of information for any investor.
Okay, so we've got the huge CapEx story on one hand, and this major analyst disagreement on the other. So how does this system pull all 7 of these threads together into one single final verdict?
It all gets synthesized into this 5-parameter score. Let's walk through it. Financial health gets a really strong 8.5. That's thanks to Amazon's rock-solid balance sheet. Growth prospects, a solid 8.0. Competitive position is a monster 9.0. And that's driven by that high ROIC we saw earlier. Management quality gets a 7.5, which kind of reflects that aggressive reinvestment strategy. And finally, valuation gets a 6.5. It's okay, but it's not cheap. All that averages out to a composite score of 7.9 out of 10.
And what that 7.9 score gives us is this really clear, actionable investment thesis. The final verdict isn't a simple buy or sell. It classifies Amazon as a core compounder, which is a high-quality company, and then it suggests a strategy. Hold the stock, and maybe buy more on any significant price dips. It's a smart, nuanced conclusion that comes from a deep quantitative investigation.
So if you're thinking, hey, I want to try this, it's actually super simple. It's just a few clicks. First, install the free Finmagine Chrome extension. Then, go to any US stock page on stockanalysis.com, click the Forensic Analysis button that'll pop up, let it do its thing and gather all the data, and then just copy the prompt it generates right into your AI chat tool. That's it.
So really, the question I want to leave you with is this. This tool is designed to turn you into a financial detective, helping you uncover the real story that's hiding in plain sight within the data. Now that you've seen how it works, what company will you put under the microscope first?